Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I am Dustin. We are looking at AT&T, which again, this is odd. And the reason why I say that it's odd is because it's very difficult for a stock to get on the most active list on Yahoo Finance while doing two things. Number one, it was only down 1% today. Number two, it did not have an explosion of volume at all. But it is fascinating to look because if we look at this chart for AT&T, what an ugly, hideous experience this has been for people this year. And I say that with all kind of empathy, kindness, sympathy, and compassion for your accounts, because you probably have lost a ton of money because sometimes having a dividend is not worth the loss of equity. Now, what we can see here is that we're at $14.80. We are down again 1%. We were starting to actually get a positive rolling return on the 1 day, and we've gone positive on the 5 day, which again won't be hard because of the type of moves that you've seen, but we're still negative on the 15 day, the 1 month, the 3 month, the 6 month. We have a price to fall and have had it since what it looks like. July 14th has been since we had a price to fall. And if you want to skip this price to rise in the middle here, because I try to look at two consecutive back-to-back, we've actually had a price to fall since July 6th when it was at $15.87. Should have taken that signal. But what we can see that's even kind of worse is that on the shorter term for the trading signals, we still have a go short on the intermediate, short term, and longer term. We do have what looks like in the trending a potential flip on the short term to bullish, but I don't trust it because of the type of move that we've seen. When you see something drop into a valley, if it does something called a dead cat bounce, technically that's bullish, but it's not. When we can look on the intermediate term and the longer term, we're still very bearish. When we look over here at the overall sentiment indicator, the one positive thing that I would say, but not to be surprising, is that this thing got into the high 30s, low 40s. You see how it has the blue lettering with the white background? That means that things were so bad that this oscillator was completely oversold, but yet it continued. Yet it did not survive. What you would expect from AT&T at this point is that this thing could easily make it back up to, like, I don't know, $14. Actually, it did. It made it back up to 14 or 15 bucks. This, boys and girls, may be the beginning of what could be the full rollover. When I look over here, the one thing that's positive if I look at the actual trading signals, so these are trading signals that are set up based off of the individual indicators that are set up inside of this spreadsheet that I have for myself. Now, the one thing I will say is that we don't have any bull key 3 or bear key 3, and we do see a coming rising bull, which would be expected, and that is going to be coming off of the fact that we are essentially coming off of a bottom here in our short-term indicators. So we would expect a rising bull to come, and we would expect some bullish price action inside of AT&T. I don't know if I'm willing to take that risk. I don't know if I'm willing to put my money on the line for that. Again, this is not financial advice. I don't have a position, but if I did, I'd be selling or buying, and I wouldn't tell you a damn thing about it. When we're looking at the overall indicators, though, we can see that we just don't have confirmation of any true direction being in charge except for down. Supply is in control. Demand does not have control of AT&T right now. If the demand was in control, we wouldn't see the big price moves with this humongous volume. Look at where the volume was the highest. The volume was the highest in AT&T when the price was collapsing. That's super terrifying. I mean, if I look at this price here back on 420, which again is super ironic, 420, it was this. So the last time you had a large gap down in a humongous candle with any real volume was on a day when it fell. And that was the highest volume that you'd seen up until this recent episode that we've seen in July of 2023. And look at the volatility. The volatility, it's just weird because you're seeing that this thing essentially bottomed on July 4th or somewhere around there. It's essentially been breaking out in volatility. The price correlation has gone negative, more and more negative as the volatility has exploded. You can see that the correlation is incredibly negative still. And what might end up happening is this correlation is going to start to round like it does and start to rise just as the volatility is about to roll over and start to fade down. So what you might expect is that now things are going to get even more uncomfortable where you're just going to slowly be falling and you're going to be essentially just like kissing the bottom of this range all the way down to like what, $10. I have no idea how low the bottom could be. All I know is what I see here, which is that, again, the day you got a big price drop, it hit the bottom and it just kind of like slowly skidded down the bottom of its range until in here in June when it started to stabilize a little bit. And then we got really the next big leg down. So I don't know what you're thinking long term. I don't know what your opinions are, but tell me in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? Before you go, subscribe to the New High newsletters. Comes out Sundays at 9 a.m. We give you 25 plus stocks breaking out to new highs, 52-week highs, and all year highs. I'll talk to you soon.